markets. But let's do one thing. Let's move on, because for now it looks like some stocks like Maruti, Kotak could open at new lifetime highs. Raamdeo Agrwal is also with us on the Motilal Oswal conference. Raamdeo, hi, good morning. The mood has changed from your last conference to this conference. Last conference we were at 52-week low. This conference we are at 52-week high. Do you see more gains for the markets from here on?
It feels very nice here. Of course, the all-time high is not because of the conference. It's all because of the underlying trend, or the negative interest rate and your monsoon and all sorts of things happening. And global markets are also good. So I think all the factors are in confluence right now, and the mood is good. What I'm seeing is that sector after sector, the impact of digital, what's going to happen to the finance sector, or some of these things, or even what is the kind of development which is happening in oil sector. So a lot of these things are very positive, and these are the companies which have been winning in last 8-12 months, and we are seeing that those companies are reflecting in today's moment also. So very clearly there are some segments of the market which are doing extremely well, and some segments of the market they are slow. But the opportunities like Ultratech Cement, we heard the presentation. Currently there is for quite some time, it is for a few years, the whole industry is in a low profitability situation. But what has happened in China in last, starting from 1990, we are at a consumption level of 1990 in China at about 250 million tons. So from there they have gone 10x to 2.5 billion tons of cement being consumed right now. So that's the kind of possibility we have. Only housing can consume 1 billion tons. So those are kind of eye-opener kind of situations we are seeing. Now the issue is whether it is going to happen or not,
Okay, Raamdeo, hi, morning. A lot of the market is still in denial about this rally. I mean, there are bulls, but then there are very reluctant bulls as well. What's the sense you're getting? Could this market surprise people on the upside and get into a multi-year bull market?
I know one thing, that at current levels of 70, 72%, 73% to GDP, market cap to GDP, earnings being depressed right now, and we are looking at post-monsoon, inflation coming down, and lower interest rates, and a whole lot of things. So I would think that valuations are not elevated, though in terms of PE, because earnings are depressed, so the price is looking to be high, So it's a relative stuff. If your corporate profit to GDP instead of 3.5% is 7%, the same P multiple will look 20 instead of 24, it look like 12. So right now, to the depressed earnings, you cannot say like in any turnaround company, when they make profit first year, the P looks to be almost like 100 times. But that P has no meaning. That's not the normal P. So right now I would say the earnings are not normal, and hence P calculation is also not normal. So we have to, it's not that we can ignore that entire P, but yet I think there is a good room for the P to be adjusted for the normalized earnings, which I would think is about at least 25%. So if you do about 16-17 times, we are talking about very, very normal kind of P multiple at this juncture.
Raamdeo, you had a lot of companies. 60% of India's market cap was represented. I attended some of the presentations. I had my favorites, but let me ask you your favorite. Which one did you like the most?
Yeah, so I liked Chitra's presentation. First time I heard her speaking on a NSE as a corporate, and what is the potential of this, monopoly exchange from India. So that's one very good one. Even with her, the next yesterday was Aditya Puri. So from his talk, it was very clear that the banking opportunity with the PSU banks and standstill and foreign banks kind of reducing their operations here, and economy on the surge. The banks which are well positioned for risk management offerings and the current profits, capital adequacy, I think the opportunity is very, very large. Not only for him, but all the banks, 4, 5, 6 banks which are operating in that segment. So that was also very interesting. Of course, Rajiv was just too good in terms of his presentation on his strategy and how he thinks about his own business. So that was an entire two-wheeler business. So he has some radical remarks to make. So he clearly scored. He was very popular among the crowd.
Okay, those are about the presentations, but let's get back to the markets then, Raamdeo. You know, generally when the markets hit a new high or 52-week high, there is a left out feeling from the retail community and there is a buyer's panic that we see. That's just how things play out. What's the sense you're getting? What's the word coming in from domestic investors that have perhaps missed out in the last leg? Do you expect to see a buyer's panic now?
I'm really confused this time to see the investor behavior domestically. They've done so well, and timing the correction also. Probably that's lack of our understanding of the dynamics here. But I think I don't think there'll be a buying panic or anything like that. But they may stop selling. You know, that itself will do a lot of good to the whole thing. You know, FIs are buying, and if today actually domestics are selling. So if they stop selling, from where they'll buy? They have to put the stock prices much higher to get their stocks. So I think not selling itself will be a big trigger, and if they actually get on to buying, see, because somebody who is selling right now, to turn them on to buy convincingly, you need some change of facts.
Raamdeo, of course, you know, when we came to your office for curtain raiser, you told us that you were meeting Vishal Sikka next day for that analyst meet. You spent the day with him. Is your confidence intact in Vishal Sikka himself, in the Infosys stock? Do you see the stock bouncing back?
I was very impressed. First time I listened to him, he is very impressive, and his thoughts are very clear. They are clearly creating next generation services company out of Infosys, and there is a challenge. There are two parts of it. One is the existing legacy business, which has to be kind of reshaped so that it is more relevant in the future, and then they are talking about completely new set of businesses, so-called digital and new businesses which are new services which are coming up. I think there is a mood is clearly cautiousness, and my sense is that they are talking upfront the bad news and not talking so much the good news, the deal wins or the ramping up. So if out of 100 clients, top 100 clients or top 20 clients, one client is doing badly, they are going, you know, they're kind of telling you everything about that one client. And a lot of people are thinking that what is happening to one client may be probably happening to many more clients. But what are the good things happening to many good clients? That's not being, you know, kind of measured properly. So mentally it is very difficult to figure out how much to give negative marks for one client and how much positive you should give for 99 clients. And that will reflect only in the quarterly result, where he's saying that my growth in Q2 will be better than Q1. But it's all for the analysts and all, those who do spreadsheet and those who stayed with them. And so I'm not a, you know, but one thing is sure that for some time, it will not be a roaring growth. 10, 12%, 15% is fine, but thinking about 20, 25% kind of growth, I think that hyper growth era at least is not there right now.
Okay, final question, and I get back to my original question. Last conference, when we went and did closing bell there, the Nifty was at 7,800. Mood was somber. Now we are at 8,800. Do you see 9,800 or 10,000 by next conference?
You know, whatever we say in terms of this 6 months, 1 year targets, see, mood is good. I can only feel that downside is limited, upside is very good, and particularly upside for a well chosen portfolio is extremely good. You know, so one has to be, though the market might stay here or maybe 9,500, 9,700 or even 10,000, but that 10% move is not that important, in the sense that if you make 10%, I would not think that you've done wonderfully well in the market. But in that 10% move, I see 20-25% kind of return for a well chosen portfolio.
Oh wow, okay. We hope what you see comes true. Thanks Raamdeo for speaking with us. You've really cheered up the markets, cheered up all of us, because the pre-opening rates are indicating that the start will be in the green. The mid-caps index could have a better showing, and it's all your favorite stocks, Kotak Bank, Asian Paints, Ultratech Cement, IndusInd Bank, that are looking quite good. Since we have only a couple of minutes to go, yes Anuj?
Yeah, since we're talking to Raamdeo, I think he makes a very interesting point, always does. I think that his most important theory has been, if you're coming into the stock market, look at what is the downside, because in bull market, upside will take care of you. And as I said, it's about stock selection. Even if the market goes up 10%, you get 20-25%. But what if the market goes up 25%? A well chosen portfolio then can double, treble. So If you're convinced that the downside is only 10 to 15%, you got to be ready to take that mark to market and move into the equity markets.
Oh yes, and if you're convinced about the momentum of the economy, and I know I keep coming back to that point, but yesterday at the awards we really got a sense of how the economy is shaping up and how things are picking up.